Hello and welcome back to Swing Trading Masterclass by Wealthy Education. In this video, I'll take a look at those cup and handle patterns, throw a few technical indicators on them, and show you how you may have traded them in real life. Now, with cup with handle patterns, the first thing you need to keep in mind is that by its very nature, you're talking about breaking resistance. So that's your first technical indicator, quite frankly, is the breaking of the pattern itself. You can also do things like add these moving averages. So let's go ahead. This is a daily chart. So let's go ahead and perhaps use something a little bit more stringent, higher time frame. 20 and 50. I'll use those. And what's interesting here is as you are forming the cup, you've already had the crossover right here. And then the moving averages spread out quite nicely and show real momentum. So the moving averages in this particular setup worked out quite well to keep you in the trade longer term, which of course is crucial. Dollar CAD, again, by its very nature, you're breaking resistance, getting involved. I would point out that 130 is the bottom of it. 130, of course, being a large round number, so that in and of itself is something worth paying attention to. Forex loves large round numbers. I mean, all assets do, but Forex seems to be particularly sensitive to this. And you can also use some other indicators. So, for example, let's go back to the MACD. So, in this scenario, as you are forming the cup, you can see that we crossed. And then shortly before breaking out of the handle, we crossed the signal line. Right here, right as the handle was forming, we broke back down, crossed again, although it's the moving average cross, not the signal line cross, and took off to the upside. So that in and of itself was probably worth paying attention to. However, sometimes it's just simple support and resistance that matters more than anything else. You can clearly see how 130 has meant so much to this pair. So Litecoin formed this little pattern here. Again, large number comes into play. $100 right here at the bottom of this pattern. $100 is about as big and round of a number as you can get. You can put in something like an RSI. And when you check that, you can see that we got right here, right before we made this handle, we shot straight through in the overbought scenario. And then when we dropped and we broke out, you can see that we kept pulling back and kept approaching. The pullback gave you the go, if you will, that we weren't overbought, so you can jump in. RSI wouldn't have kept you out of the trade at that point. You also can look at the moving averages. It's a 1 hour chart, so we like to keep it somewhat short time frame, like a 9 and a 20. And there you go. You can see that we are crossing multiple times. We went flat, and then we crossed here and spread out at the break of this handle pattern right here, right there. So that lined up quite nicely. And then, of course, we kept the moving averages spread until we pulled back from 140. So truthfully, you could have been in this for about $23.